Hi, I'm Charles Payne, and welcome to Making Money Right Here, Right Now. That's exactly what we're going to do, help you make a lot of money by investing in the stock market. To do that, we go with the real deal. You know what that is. We look behind the headlines, we look under the hoods. We actually look at the stuff that these companies file, income statements and balance sheets and cash flow things, kind of things you want to do to make a lot of money. People here, they help us, the investment pros. Heather Prabhakar, Matt McCall in his cool socks. Dani Hughes is back, CEO of Divine Capital Markets, with a fantastic yellow dress on. Tracy will be back tomorrow, and Kate, our social media guru. Hey guys, let's dig into it. The first real deal. Once again, the market moved higher, but this time the focus shift from geopolitics to corporate earnings. We have big retailers like Dick's Sporting Goods, TJ Maxx lifting the Dow 80 points. The S&P in a shadow of its all-time high. Also, the market, well, it was able to breathe a sigh of relief when the government's official inflation number. Now, remember, it's the government's official number. It's the CPI. It gave a benign inflation reading. This is so critical, guys, because nothing right now is more important to the stock market than the Federal Reserve. Now, love them or hate them, they're going to give you a chance to get rich, in my mind, over the next couple of years. In fact, I got to blow the whistle early in this show. Open up a page right now from Payne's Investment Playbook. Tomorrow's the Fed releases what they call their minutes, right? They met a month ago. We'll get a chance to see what's going on. It feels like there's some dissension amongst the ranks. One thing we do know, though, more than likely this report will move the markets. Now, interesting, some pundits actually started to say, hey, the Fed's probably going to hike rates. They may do it this year. I got to tell you something. Based on the last 4 times, I don't think they're right. I actually think the exact opposite. I think the Fed probably will keep rates low for a long time. Now, here's the evidence, okay? Let's start with the real unemployment report. It's called the U6 report. 12.2%. That's the real unemployment number. That's as high as it's been in any of the last 4 times that the Fed decided to raise rates. Okay, what about inflation? The second lowest inflation reading, again, this is the official numbers from the last 4 times. That's not going to force the Fed's hand. Not only is the real unemployment rate way too high for the Fed to change course, let's talk about the composition of jobs, right? Because we know it's lousy. Take a look at this. This is 2014. Net part-time jobs have gained in 2014 at the expense of full-time jobs. You know, 1968 part-time jobs were only 13.5% of total employment. They peaked at 20% in 2010, and now we're roaring backward, 19.2%. This is the part-time economy. Janet Yellen, I don't care what you think about her, she knows that this is not a great recovery. We also know that the Fed playbook, it's all about one thing, right? You print money and you make people feel rich, and they're supposed to go out there and spend that money. They're also supposed to go out there and forget about savings because you don't get anything back. So what the heck? You go out, you buy stocks, you buy houses. Here's the thing, though, guys. That's not what's been happening. Take a look at this. This is what we're doing with our money. Citizens, individuals, we're not buying stocks. We're not buying houses. Instead, since QE began, Americans have plowed $1.2 trillion into the bank. Our grand total is near $11 trillion. That's 84.5% of annual disposable income. That's the highest ratio in 23 years. So I got to tell you, unless wages begin to soar, I'm going to state right here and right now, the Fed will not hike rates for at least 1 year. And that means you have a great chance of making a lot of money. I'm talking Dow 19,000, maybe 20,000. You better listen to me this time. All right, guys, let's talk about this. Let's get down to the real deal, because so many people, millions of people have missed this rally, in part because they have some serious issues with monetary policy, fiscal policy. Hey, guys, so do I. I wish the Fed didn't exist. I really do. But it's nuts that you've missed out on so many chances to make so much money. Moreover, here's the one problem. You have to learn how to separate Main Street from the canyons of Lower Manhattan, right down the street down here, because you know what? They're two separate things. They really are. Danny, do you agree? Do you think that the market, do you think it could go up from here? And if it does, I also want to ask, what's the one stock people should own? But first, what do you think about my call on the Fed and the market?
Well, I think you're spot on with the Fed and the market. I'm so amazed, though, that people have plowed $11 trillion into the same banks that failed them,
Great point.
not so long ago, but I think you're absolutely right. The only place to go is really the U.S. stock market, and that's where we've seen a lot of people go. And I think we need to continue to do that going forward. I really don't think that we're going to see any kind of rate hike anytime soon. Wages have not risen at all.
A penny. A penny.
Right.
Are you kidding me?
Over the past year, they haven't done
inflation up
anything.
like that. Okay, what's your stock, though?
my stock for the long haul.
Let's say someone's watching. They say, okay, you've convinced me, Charles. I'm going to buy at least one stock right now, and I'm going to buy it from the pretty lady in the yellow dress.
Well, I don't want everybody to take this advice because everybody's a little bit different.
No
but
hedging.
I do
No
think I do. You know what I like? I like Apple. I like Apple. I own Apple. My kids own Apple.
Right.
I think for the long haul, since the recession has embedded us in everything, we've actually seen Apple go up over 300%. I think there's an incredible amount of innovation there, and I really think that Apple.
And we saw the chart just a moment ago. I think that 100 is always psychological.
Yeah.
North of that, it might even gain momentum.
Well, Mr. Payne, you're going to be 2 for 2 on your call with the Federal Reserve because I also agree. It's not going to be anytime soon. Matt and I have been saying we think late 2015 as well. And I'm going to jump in on the part-time labor market that we have now because we all know this employer mandate for Obamacare does kick in this fall. It's a huge deal to small companies.
Yep.
And if you think that hiring is stagnant now, I mean, this is only going to get worse over time.
Charles, I got a stock for you.
Okay.
But I'm going to tell you why first, though. I'm going to tell you, I agree. The Fed concern right now is not about keeping interest rates low for too long. Their concern is if they go premature, that something happens with the economy and it falls apart. They've kept them low
And
for
also,
so
let's
long.
face it, too, they're very cocky, right? I mean, I think that's really the bane of all of these Fed chairman people. They think that is, when we see inflation, we'll flip a switch. I hear you. The last 2 or 3 times you tried that, we all suffered.
Yeah, it doesn't work, but you know what? It's good for us as investors. So, I like Korn Ferry. They're a staffing company because if the economy continues to get better, you're going to see more hiring of these middle management and higher management jobs. And we've seen that turn around greatly. Not as many temporary workers as far as staffing is concerned in all the numbers I've looked at.
What happens if the economy doesn't get better? What if it doesn't? I mean, what if you have we're talking long term.
Well, then all 4 of us are wrong.
We're talking long term here. My stock, it was a Vice stock, to be honest. I had Diageo as a pick because when things are really bad and things are really good, people still go for the Johnny Walker. Sales have increased 42%. They're going to go to 50%, and they're going to take advantage of the international market.
So you figure no matter what, we're going to knock them back if things are good. We're going to knock them back if things are bad.
Absolutely.
Now,
and it's
Matt,
like that
I
with a lot of these
got to
Vice
agree
stocks.
with Heath here. I feel like you're getting too cute by half on this one.
Too cute. I am too
I think
cute.
you're getting a little.
Oh, my God. Can I just
sure.
before so we chill Matt out a little bit?
Real quick about the staffing, Charles. What the difference is they're hiring more middle management, higher management as the economy gets better. That's why I like Robert Half. I don't like Korn Ferry. I don't like the entire staffing sector, but this company has that niche, and that's why I like it.
All right, real quick. Number 1 tweet on CPI from Maddie Iglesias says, if you wanted a bacon-wrapped, butter-basted steak, the BLS had some bad news for you today. And then on missing the rally, Obama Game said, if 100% of the people take their money out of the stock market, Wall Street will still rally because Wall Street is fake. Your favorite crowd, the doom crowd.
Yeah, but we did have, unemployment is now at 6.2%. Last year at this time it was 7.3%. And that's a lot faster reduction than the Fed had anticipated.
And I feel like if we have another couple months of that, I feel like Janet Yellen's going to come to the table a little bit sooner than next year, especially
we're going to have to see millions of people come back into the job market. 11 million people have left the market. And she understands that that's an artificial number. I had the real number up there, over 12% unemployment. That's the real number. Janet Yellen knows the real number, and I think she's cocky. And, the Fed has a game plan. They stick to it. She cannot look herself in the mirror and say, we've been successful. Jobs are doing poorly. The housing market hasn't done well. Nothing that the Fed is supposed to do is doing well. And they lie about inflation. They do the substitution thing. So if you were used to a porterhouse, flank steak is pretty good too.
But what she'll fall back on is she'll fall back on the stock market. The wealth that was created with the stock market. Unfortunately, Main Street has missed out on that. But that's what she'll say. That's
Yeah,
the
But gas prices are lower. That's a big component of CPI.